Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. In this video, I'll speak about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is essentially what the big players in the market are doing and how they're moving and shifting their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts. Now, starting here from the monthly time frame, what we can see is that we have a market which at the moment is rejecting to the upside a quite strong historical monthly support and demand area. This zone, in fact, was acting already as previous resistance, preceding all these rejections to the downside. Then the market broke above that zone with this impulse, and all that previous resistance was turned support here. So the market retested the level as support, because what we know is that after a very strong level of resistance that has been respected as resistance in multiple occasions is broken to the upside, at that point you expect the retest and the rejection to the upside. So the market went for that retest and then rejected it to the upside, exactly as you would naturally expect in a situation like this. So far, from a monthly standpoint, the market has been behaving exactly as you would naturally expect in a situation like this. We can also notice that the market has been creating a series of monthly higher highs and higher lows. So we had the perfect development of a monthly uptrend here, with the creation of these higher highs and higher lows. Now, the last step was the creation of a new higher high. So what we know is that after a new higher high, the next logical step would be first for the creation of a correction, and then for the market to create a higher low, and then yet another higher high. This is what the market would do naturally in the development of an uptrend, because what we know is that no market can just go up in a straight line. Every market will create a series of higher highs and higher lows, which is the definition of an uptrend itself. So here on the monthly time frame, everything is quite clear. So let's keep it in mind and drop down on the weekly time frame. Now, from a weekly perspective, the situation is very clear as well. We had a massive impulse to the upside. Then the market started moving in this horizontal consolidation pattern. Now, in this case, what we had was a wedge formation or triangle formation, depending on how you want to call it. Now, simply put, this is the creation of lower highs and higher lows at the same time. Now, after the creation of a consolidation after an impulse, which is exactly what we're getting here, because we have the impulse, then we have this triangle formation, which is a consolidation pattern, you would then expect the market to break out to the upside and continue with the uptrend, which is in fact exactly what the market did here. So we had the impulse, consolidation, in this case in the form of a triangle formation, and continuation to the upside. So far, everything very clear, and everything basically as you would expect in a situation like this. Dropping down the daily time frame, what do we see now? Here on the daily, we can see that the market, in creating this breakout to the upside, has now created this overextended W formation. Now, in general, when you have the creation of an overextended W, this is usually a manipulation pattern, because what we know is that when we have an impulse to the downside, correction, and then the market tries going lower, what retail traders will usually do is start adding shorts, and their stop losses are usually placed above the high. So what retail traders will do is give the possibility for institutions to go and hunt all those stop losses, because at that point, if after the creation of W, the market starts going higher, all the stop losses above the high will be triggered. And why is that important? Because as we know in the market, for every seller, there needs to be a buyer. And for every buyer, there needs to be a seller. So If institutions at a specific moment don't have enough liquidity to enter their shorts, let's say, for example, in this case, they want to short, they need to liquidate those stop losses, which essentially at this point are buy orders if the retail traders are selling. And all those buy orders will give them the possibility to essentially create the liquidity to fill in their orders. That is why very often after the creation of a W formation, in my experience, there is a rejection to the downside. So we're now getting this overextended W formation with a good probability of getting a potential rejection to the downside, essentially completing this pattern with a first downside target at 0.32 of the Fibonacci taken on the impulse leg, which in this case, at this moment, is around this area. So let's go and check out what institutions are currently doing. To do that, we have to go and see what we have when it comes to the commitment of traders, so what the big players in the market are doing on gold. And we can see that with the last reports, they have in fact been shorting. We went from 302.5k to now 236k net positions with 6,900 longs getting closed with the last report and another 200 shorts added. Already with the previous report, we had 13,000 longs getting closed and 4,500 shorts getting opened. So institutions seem to be moving back to the bearish side for gold as the market is creating this overextended W formation. So there is a good probability that inside of this area, we could see more institutional shorting, which at that point could potentially push this price lower. So if the market is in a situation like this, what would I expect? Now, by the way, if you still haven't, make sure that you go and check out my free Telegram channel so you never miss updates, which is linked in the description. Now, back to the analysis. So in a situation like this, what would I expect? Well, as my students know very well, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bullish to bearish market, I wouldn't be surprised to see a potential rejection to the downside below this area for the market to retrace at the 0.32 of the Fibonacci taken on this impulse leg. That definitely wouldn't surprise me. If you want to learn more, I really suggest that you go and check out the website linked in description. In fact, what I share here on YouTube is actually just the tip of the iceberg. And if you head over to the website, you will see that you have the possibility to join the best trading program on the planet. You will gain access to all the courses ranging from the very basics of charting all the way to the more advanced topics like building automated trading strategies using the MQL programming language, building portfolios of strategies using quantitative finance tools like the Quant Analyzer, and much, much more. You can gain access to the trading station software with Telegram notifications, integrations, one-on-one private mentoring directly with me, the COT data software that often you see me use in my free analysis and education. From the integrations, you can also gain access to all my EAs. So you can gain access to all the EAs that you see here listed with their presentations one by one. You also have the possibility to gain access to the very entertaining trading show. So essentially, this is a live stream of all trades that are taken on my account as they're happening live. So entry, exits, trade managements. And if you continue to scroll down just below the testimonials here, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the checkout process. So I really suggest that you go and check it out as soon as possible. The link is in the description and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.